Today, we're going to talk about how we can move our money from here to here and expose ourselves to an opportunity to increase your income by 900%. Yeah, you heard me. 900%. So if you're interested in something like that, stick around and check out the video.
You have reached your financial destination.
What's up, people? Welcome back to the channel. It's Rod Reedy with Financial Destination, where we talk about everything that has to do with financial literacy to help you create a money navigation system. Now, this system will help you go from lost to found on your financial journey and give you the opportunity to enjoy life and enjoy your family and prepare for your future a little bit better. Or in some cases, if you listen, a lot of bit better. So today we are talking about how we can move our money from one place to another place and increase the opportunity for that money to grow significantly more. So I don't want to act like it's all magical or whatever. Ho, 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 it's magic. But today we're talking about the magic of the high yield savings account. All right. So a high yield savings account is an account that, it says it in the name, it's high yielding. It gives you a higher interest rate for your money. So a lot of people talk about the 7 streams of income, and some people get discouraged about trying to pursue and trying to obtain all these streams of income. And they don't even realize they already have access to 2 of them. That is your earned income, and that is interest income. And today we're talking about interest income. That is the income in particular that we're going to work on to make sure we're exposing our money to better opportunity to grow and to grow faster. So speaking of interest, a lot of people don't understand how or what the bank does with our money and how they can pay us interest for having our money in those banks. So this is what the bank is doing with your money. Just basically, I may have somebody that's like a banker or deep in the trenches of banking to come on here and say, that's not right. But this is just a foundational conversation, brother. What banks do with your money is you put your money in the banking system. All of your money is not in the bank. So what you see online is an representation of your money, but the physical money itself is not still in the bank. That money is being used to invest. That money is being used to give loans to other people at higher percentage rates than they are giving you. So right now, I mean, we'll see in the slide deck here, the average interest rate for a traditional bank account is like 0.46%. Like, come on, dude. Are you serious? That's less than 1% interest that they're paying you to hold your money. Yes. So your money goes into the banking system, into your bank account. And as a generous favor, the bank is saying, oh my God, like, thank you so much. Because you chose us to put your money in our bank, we're going to give you 0.46% interest on the total in the sum of your savings account that you have with us. And a lot of people are like, man, the bank is paying me because they're paying me because they have my money and I'm so excited about it. Or some people are not even aware of the fact that they're getting paid interest because it's so freaking little. 0.46% is nothing. So today we're going to talk about how we can move that money to another type of savings account and expose it to a greater opportunity. So as I stated earlier, the average interest rate for a traditional savings account right now is 0.46%. As I said, that is half of a percent. And we're gonna get into the numbers here. I got real nerdy today. Got some calculations pulled up and all type of stuff. So the biggest thing is realizing the difference between a traditional savings account and a high yield savings account. So I went to the top 6 or 7 high yield savings accounts regarding the interest rate and average those. And what the average for those was, as you see here, 4.82%. So we go from 0.46% to 4.82% of interest being paid to you for the bank holding your money. You're doing them a favor by allowing them to have your money in their bank. And that's where these interest rates come from. Now, a lot of people may be trying to figure out, how in the world can one bank only pay 0.46% and then another bank pay almost 5% on the money that they have, that 5% of my money that they have held in their banking institution? Well, when it comes down to it, you got to think about business. You got to think about the overhead that it takes to maintain a certain type of business. And when you're talking about a traditional bank, brick and mortar, buildings, people, labor, insurance, they have all of those expenses. So, like I said, to keep your business running, you have real estate expenses, you have insurance expenses, you have labor costs for all the tellers, all the banking specialists, all the corporate and senior level people in their big offices, their big corner offices in New York City and Chicago and all these big cities. And Charlotte's like I think like the banking city. I don't want to sound crazy, but I think it's a big banking city at the end of the day. Charlotte is. But the how is because most of these high yield savings accounts are online banking accounts. They don't have buildings. They don't have all these various property taxes and mortgages and leases. They don't have all these people that are sitting in these places trying to do their job, and they're not incurring the costs associated with those buildings. So because of that, they can offer significantly higher interest rates to as a reward for you to bring your money from here over there to them. So that's why. I mean, plain and simple. You go from a 0.46, it's almost 1,000%, which is 10 times the amount that a traditional savings account offers you. You get that in the bank. So, and that's what I'm talking about here. It's all about online banking versus brick and mortar banking. So right now we're going to do an example. We're going to do a $10,000 example. And this is where the calculation is going to come out. It's pretty self-explanatory. So y'all just rock with me on this. But this is what I'm showing you is meant to make you say, all this time I've been cheated. Like, and the reason, and let me step back here. The reason that the interest rates are so high for these high yield savings accounts right now is partially, and I don't know, I don't want to go over the full details and be incorrect, but I know part of it is because it tracks with inflation. Inflation is really high right now. Interest rates for everything is really high right now. The interest rates for a car, the interest rates for a home, interest rates on credit cards, like interest rates for people that are investing and saving money with various savings accounts and bonds and stuff like that. Their interest rates that they're gaining is high. And then the people that are borrowing money, those interest rates are also high. So because of that, that's how high yield savings accounts are able to be so high right now, is because they track with however the economy is doing. That's how the high yield savings accounts are doing. And I'm planning to go and do some more research on the history of the interest rates that a high yield savings account offers. But regardless, 0.46 compared to 3% is still like, why wouldn't I? And we'll talk about some pros and cons, but to me, the pros outweigh the cons. I don't even, I don't even understand why. And I'm talking to myself right now. I just got a high yield savings account probably a year and a half ago. And I'm sitting here thinking to myself, like, why haven't I done this a long time ago? So you're not alone. I just got, I won't say I just got hip to it, but I just got to the point where I was like, oh, I can call myself a big dummy. But it just got to the point where I was like, hey, I need to actually make this move. Or I had saved enough to where moving it would gain me a decent amount of money over a year, which is what the interest rates that we were looking at. Those interest rates identify with a annual yield percentage, which is the annual percentage yield, APY. So when you see APY, that's what that means. So we're going to do a $10,000 example here on this. So traditional versus high yield. That's what you're seeing. You see, I'm going to point in the right direction right here. That's what you're seeing right here. So we're going to look at a traditional savings account versus a high yield savings account. So we got a $10,000 balance in both. You have the average interest rates for both, 0.46 and 4.82%. So even with this $10,000 balance or this $10,000 savings account that you have here, you see where on the traditional side, you'll be paid out a whopping $46. Now you tell me, if somebody said, hey, if I was going to give you a check for $42 and I was going to give you a check for $482, which one would you take? No brainer. It's kind of like, how do we not know about this already? How and why haven't we taken action on this already? I made a post about this on my Instagram probably 6 months or so ago. And there were a couple of people in the comments like, thank you so much for telling, like for showing us about this. I'm going to move my money today. And this whole video was really sparked by a conversation that one of my buddies sent me. He sent me a screenshot of I guess an ad that came across his email or his phone where Citibank was offering a high yield savings account with a 4.42% interest rate. And he just sent me the screenshot. He didn't say anything or nothing. And I immediately pounced on the text message. It was like 7 o'clock in the morning. And I was like, yeah, like, where's your money right now? He was like, Regions. I do not like Regions and I do not like Wells Fargo. If you have money in those places, please move it. Just please move it. And I won't get on a rant about that. I say that for another day. But I basically told him, no, you need to move your money now. And then following our conversation at 7 o'clock that morning, I ran across a video that if you guys are into personal finance at all, personal finance YouTube or any of that, Anthony O'Neill has a big platform. Used to work for Dave Ramsey. He kind of broke off so that he can speak more to the Black community about money and it not be a big uproar. At Dave Ramsey, that wouldn't have been received well, but broke off so he can have his own thing. Well, on Wednesdays, I think he does a Q&A, and this guy was like, he asked this guy how much money he has in his savings account. He was like, I got about 50. I got 60K. I got 60,000. And Anthony was like, and where is it? He was like, oh, it's in my Regions. I'm just using Regions, right? Oh, it's in my Regions savings account. He said, hold on. I need you to stop right now. And he told his producer, he's like, put the link in the chat. I need you to move that $60,000 out of that traditional savings account and go get you a Sofi high yield savings account right now. $60,000, y'all. So I'm just doing some random numbers here. If we look at this example that we just went over right here, you see that $10,000 and you times it times 6. The interest you would gain times 6. So 482 times 6, or I say just $500. So $3,000 a year on 60K. versus what's that? 50 times 6, 300. So $60,000 in a traditional savings account will yield you $600, $300, excuse me. And a high yield savings account, it'll yield you $3,000. I mean, what? I don't know who said this, but what is we doing? Like, come on. So the whole point of this video was just kind of like a public service announcement. Move your money from a traditional savings account to a high yield savings account. Like I said, we're going to go over the pros and the cons. Choose accordingly. And most of this, you don't want to say, if it's not going to make me nothing, then why am I moving it? Well, it ain't making you nothing now at your regular bank. At least you can make a little more of nothing at a high yield savings account bank or bank offering a high yield savings account. So even if you have $100, instead of you getting 4 cents, instead of you getting 4 cents, at least you can go over and get, what is that, $4 at a high yield savings account. So, man, but here is the, and I'll get this one a little closer. Here is the power of a high yield savings account. So I call that the HYSA. That's what you'll see a lot of times. The HYSA boost. By moving your money from a high yield savings, from a traditional savings account to a high yield savings account, this is what happens, right? So this is the little calculation. So you have the higher, and we're using the numbers from this slide right here, where we have the high yield interest that you earned versus the traditional interest that you earned. And we're going to do the calculation. So you take the highest interest minus the lowest interest, and then you divide that by the lowest interest earned. Well, that in this case, that equals 9.47, which means the interest earned on this particular high yield savings account example is 9.4 times higher than what you gain in a traditional savings account. So you take the highest minus the least, divided by the least, and that gives you how many times or the percentage increase that the higher one is than the lower one. And then you multiply that times 100, and that gives you the percentage. So y'all saw at the beginning of this, I said, increase your income by 900%. As you can see, is nudging near 1,000. You know what I'm saying? We're at 947% more, a 947% increase in our interest income by moving it from a traditional savings account to a high yield savings account. So what do y'all think at this point? What do you think about you keeping your money at a Regions or Wells Fargo or Truist? What do you think about keeping your money in these places and knowing about something like this? It's a no-brainer. So especially if you have, like, a lot of people will put their, and I'm done with this here. A lot of people will put their emergency fund in here. A lot of people will use it for sinking funds. And a sinking fund is an account with a purpose. So we use a sinking fund for our 10-year anniversary trip to Jamaica. And that's really what sparked me opening our high yield savings account, even though we still should have been opened it because we had saved up some money that would have paid us a decent amount by having it in a high yield savings account. But ultimately, we were making transfers on a monthly basis for like a year to stack up for our Jamaica trip. And having it in that high yield savings account, we earned interest on that, which, I mean, ideally help pay for some of the stuff on the trip or for the trip. So that is what you call a sinking fund. So a sinking fund can be for a car down payment, something you're saving up for, furniture for a new home, a home down payment. I can't think of anything else that you would save up for. Right now, a gift, Christmas shopping, that's a good one. And plenty of others. I mean, a lot of people have things that they're saving up for. Engagement ring, for you fellas out there trying to, put a ring on a finger. I heard it's hard out there in the streets. But when you're trying to save up for something that is thousands of dollars, then a sinking fund is a good way to do it. And a high yield savings account hosting or holding your sinking fund is a good way to get assistance with saving towards whatever that thing is, because the interest you'll earn can be used towards whatever you're trying to save up for. So yeah, a lot of people use it for sinking funds. And I want to talk about some features of a high yield savings account that you should look out for. Everybody usually has the same features, but they don't all have the same features. But yeah, so a use case would be a sinking fund. So like I said, vacation, down payments, emergency funds. And then also it's meant for short-term savings. It's not meant for long-term, like retirement or something like that, or even something that's like, if you have a little kid and you're trying to save up for 18 years until they go to college, or 21 until they get 22 and they graduate. There are much better opportunities in the actual stock market where you can earn more. And I know the stock market is scary for a lot of people, but you can gain more long term by getting in the market. New topic, another video. But anyway, this is a way for you to get a higher interest rate than a traditional savings account with zero risk. You're not taking your money from a traditional savings and putting it in the market where it can go down tomorrow, but you put it in something that is much safer. When I say zero risk, I mean there's not somebody in there pushing buttons and buying and selling stuff to make your money go down. Now, let's talk about features. So features to look out for with a high yield savings account: no minimum balance required, no minimum deposit, FDIC insured, transfer duration. Some people have same day transfers. Some of them have 24 to 48 hours for a transfer to occur. So as I stated, it is a savings account. It's not an account for you to just go and say, oh, I need to move some money. No. Some of them take 24 to 48 hours just for that reason. It's not meant for you to get to it immediately because you just had a nudge to say, oh, I want to go. Look, I mean, me right here, I'm looking at one of my guitars. I play guitar, and I think this thing was probably, I only got one now. I only got this one, but I think it was like $800. So it's not meant for me to say, man, I'm about to go and buy the guitar I wanted. Let me transfer some money from my high yield savings account. No, it's not for that. So the features, transfer duration. You want to look at how quickly, if you make a transfer, that the money will be accessible. And then also a benefit of it, like as I said earlier, it works with inflation. So as inflation goes up, it goes down. Your high yield savings account is variable. The interest rate is variable. So, and that takes us to the warnings, or I talked about the cons. So the pros were the use cases. The pros were the features, and then the warnings I'm about to go over are the cons per se. So the interest rate is variable, but not so variable that it goes all the way down to a traditional savings account APY, interest rate that they offer. It's not for long-term wealth building. Talked about that. It has limited withdrawals. So just like the transfer duration conversation or statement that I made, and I'm looking at my notes here, the limited withdrawals is so it limits you from taking so much money out over and over and over again. If you want to do that, just keep it in your bank account, in another account or something. You don't have a debit card and you don't have physical locations. So some people may not like that. Some people want to be able to get their money immediately. But when you're saving, just like retirement, you just can't get access to the $100,000 you saved over the last 15 years. You have penalties, you have taxes, and then you have a duration in which the money takes to get from that account. It has to sell you have to sell all of the holdings, get it in a cash position, and then it has to transfer to you. Like it's a whole process. So these accounts that are meant to help you save money are also not meant to help to allow you to get to it so quickly. So yeah, that kind of covers it for today. I just really wanted to come on here and just sound the alarm about high yield savings accounts and how today you should consider moving some, if not all, of your money that is considered savings from a traditional bank to an online high yield savings bank. If you have any questions about how to complete that process, if you have any questions that are not covered by the discussion that we had in the video today, hit me in the comments. I'll respond. Or also, if you look in the description of this video, you will see where I have ways to contact me with my Instagram and my website. And I also have my my Calendly link in there for any free consultations. If you want to talk about how I can help you with offering you coaching or anything like that, just reach out to me if you have any additional questions and we can get those knocked out without a problem. I promise you. I love talking to people. I love helping people. And this whole thing was created to be an agent of community impact. So if you're part of my community on YouTube, if you're a part of my community on social media, that includes you. And I have a deep desire to help you out as much as possible. So thank y'all for tuning in. If you found something interesting in this video, if you want to continue tuning in to my content, please hit the like button, hit the subscribe button, and hit the notification bell to be in the loop whenever I release new videos. So that'll do it for this video. See y'all on the next one. Peace.